What's up, guys? It is Sam here, and I wanted to talk about 3 takeaways from that week where I lost over $5,000 trading options. So if you want to see that video, go back to the channel. I lost over $5,300. Yes, so I wanted to talk about some of the 3 key takeaways that I've actually. First of all, make sure you press that subscribe button, and there's a little bell notification. Just gently tap on that bell notification. Okay. So let me tell you what I'm doing here, and then we're going to get more into the details. So back in the end of November of 2018, or end of October, I apologize, I realized that I wanted to create a life and live it in a different way than I had been. So given that my change in the direction of the vision of how I wanted to live my life, I decided to lay out a game plan, right? So if I want to live this way, how much does it take to live my life this way? So I went through and I ran all the numbers. And just because I'm in finance and talk about options doesn't mean that is difficult. Think about anything. If you were like, hey, I want to move to Florida, or I want to live in southern Italy, or whatever it is that you want to do, there's a little thing, there's a website that I use all the time. It's called Google. Look it up. So look up your rent. Look up your food costs around the world will probably be fairly similar, except for some very high local spots. But more than likely, your food costs will probably be similar. So you can look up the rent, you can look up your food costs, you can look up all the factors that go into your thing, and then you can add like a 10% fudge factor, you know what I mean? And so all the costs for me come up to be under $2,000. So, but when I'm not with a company, I'm probably going to have to pay $300 to $500 for insurance for myself. So that medical, that is. So that puts me at like 2,400-ish, 2,200 to 2,500 in that range. So I figured I need about $3,000, right? $100 a day online. And one of the ways that I'm making tremendous progress towards that goal is through trading options. And I started with the total amount of contributions I've put into this is $4,244.85. And the total amount, account value right now, actually, let me just show you so that you can see this. So this is my Robinhood. I'm just going to press refresh up here. And this is my account. $6,891. Now, the objective is to get to the $100 a day. So I laid out a time frame and all of the things that I need to do to be able to achieve my goal. So I put a time, because you want your goals to have a couple things, right? You want them to be specific. You want them to be tied to a time frame, like a deadline of some sort, and they have to be achievable, right? So you can have like 2 tiers, right? You can have your macro, and then you can have your micro. Like if your macro is to make 20 grand a month, right? And when do you want to achieve that by? Maybe let's say 7 years down the road, right? So then your micro is like, what the fuck are you going to do in the next 90 days? Like do something and set very specific over the next 90 days, right? There's your time frame. Now what's the micro? And one thing that you can do, well, I'm going to do my side hustle. Well, what is your side hustle? And then just, kind of work into it that way. Anyways, that's kind of the thought process that I went through. So I gave myself to the end of March 2020 to achieve my goal. And one of the biggest portions of my side hustle income is trading options. And 2 weeks ago, I lost $5,300, right? So remember, I said I only put in $4,200, and I'm at $6,800 right now. So I was substantially higher, right? But every single position moved against me. So the things that I took away from that experience, because it's primarily just been straight up. And there's three things that I took away from this. So the first, and the third one is actually kind of tied into it. So the first one is the actual number of contracts. I think I was trading for the amount, like the account size, right? Something less than 10 grand. The account or the contract size that I was trading was too large, in my opinion. And I want to achieve my objective, right? So I'm pushing to achieve my objective, which means that I'm increasing the amount of risk I take so that I can get a higher reward in terms of return on my money. And I think having so I shifted up here mentally from the shooting for, you know what I mean, 3, 4, 5, 6 grand. Because there was multiple weeks where I made over $2,000 in a week on like a $4,000 balance. Like, that's crazy. You know what I mean? And I was up near $12,000. So I'm not going to be shooting for some really crazy positions. I'm going to reduce the contract size slightly. And number two, but I also changed it up here so that I'm just going to be shooting for, $500 to $1,000 per month or per week in profit. So that's my objective going forward, instead of trying to break like the 2,000. So I made $2,300 in 1 week and $2,200 in another, $1,600 in one. So like I was trying to just make more and more and more. But I think having a much more tampered down approach and thinking a little bit more in the long term instead of like going to bat with everything you had the first time is probably a much more prudent risk management approach. So I changed that to shoot for $2,000 to $3,000 gain for the month, but look at it on like a weekly basis of like $500 to like $800, $500 to $1,000 gain per week, and we'll see how the month of May plays out. Number dos is slightly, just marginally more out of the money contracts. So what that means would be, well, if you don't know what that means, you should probably watch some of my other videos or Google it yourself. But basically, just more out of the money. The closer they are to, if the stock price is here and you're trading options that are right here, this is closer to the money than something down here. So basically, just going further out of the money, whether you're above the market or below the market. And the types of things I'm trading are just spreads, like credit, puts, and calls. That's it. Currently. As the account value grows, I will switch, but not probably until after I get over $25,000 in the account. So that one is pretty simple. Just going slightly, just a tiny, maybe a strike price further away. So that is going to do two things, right? It's going to go, so instead of shooting for the fences every week, it's going, and by the way, I trade weekly options. Instead of shooting for the fences every week, I'm going to make slightly less, but it's also going to reduce the risk because now I'm further outside of the money. So I need a bigger swing in the underlying price movement. And then the last thing is not getting in front of the market as much. I like getting in front of the market. I'm not saying it's a smart thing to do, but being in front of the market, like, you're able to, when you're doing weeklies, right? You could have a sustained gigantic movement over the course of a week, or you could have it over the course of several months. And getting in front of the market on a much longer time frame it wouldn't necessarily be a prudent thing to do in my opinion. But on a much shorter, 7 to 3-4 days, something so I'll get into contracts like today that expire tomorrow. By the way, today's Saturday, May 4th. So I'll get into contracts that expire in 2 days or 3 days or 4 days or up to a week, right? generally speaking. Sometimes about 8 days out, but like if I close them out on Thursday and they expire on Friday, then I'll open new contracts on Thursday sometimes. But generally speaking, it's about 7 days out, so 7 to 5 or so. And when there's such a short period of time and you're going, you know what I mean, a decent percentage outside of the regular movement of the stock, you're generally good. But obviously there's events that do happen, so I'm just going to not put as much emphasis on getting in front of the market, because I think obviously it increases your risk, and like I clearly saw these. So these are all the factors that I think played into losing $5,300 in that week, and a lot of that was paper losses, by the way. So getting in front of the market just maybe right is going to come back to point number one, and point number two is that I'll probably still get in front of the market. I'm not going to focus on it as much, but I'll probably go with a little bit less in terms of the contract size. Generally speaking, I'll do one contract up to a maximum of maybe like, I think at one point I've gotten into 6 contracts, which for an account of $5,000 is crazy, right? Like that's stupid from a risk management standpoint. And so taking smaller contract sizes and going slightly more out of the money, I think is just a prudent thing to do, even if it reduces the returns. Because by the way, I did a earnings update for the month of April to see how much I made. So if you want to check that out, go back to the channel. But I don't have to make a tremendous amount of money from this to be able to live off of, especially when you factor in the other pieces of income I have. But so those are the 3 areas that like I'm consciously factoring in going forward. Like that's how they influenced my decisions on my risk and other factors that I talk about right here. That's how I changed what I'm doing going forward. So if you guys had any questions about this, make sure you leave them down below in the comments, and feel free to let me know your thoughts. The 3 underlines that I am trading currently are Tesla, Netflix, Amazon, and a tiny bit on SPY, not very much. SPY has intra-week options, so Monday, Wednesday, and Friday expirations. So that one is pretty interesting from the standpoint that it has so many expirations. It's way more efficient. But anyways, let me know down below if you have any questions. Don't forget to subscribe to see the next update. I'm going to be actually having the weekly earnings report for the week ending yesterday out probably in the next video. So don't forget to subscribe and press that bell notification, and you'll get notified for that video. Peace.